Hello, welcome to European Open Briefing for Monday, July the 2nd. I'm Rafi Boyadjian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. Trade tensions are running high this morning as the US gets ready to impose fresh tariffs against Chinese products by the end of the week. We're seeing Chinese stocks bearing the brunt of that, with the main indices down by between 2.5% and 3%. Europe has also opened lower this morning, though we did get a slight positive close on Wall Street on Friday. The Chinese yuan is also under pressure. It's hit 8-month lows against the US dollar, but the greenback itself remains bullish. It earlier was testing the 111 level against the Japanese yen. The euro, though, is down this morning. It's come under pressure on the possibility of the leader of the German Angela Merkel's coalition junior partner resigning because he wasn't happy with that migration deal struck by EU leaders last week. The pound is also under pressure. It's down by 0.4% against the greenback, around 1.3155. We do have an important meeting coming up on Friday between Prime Minister Theresa May and her cabinet, where they will try to reach an agreement on what kind of customs partnership to have with the EU after Brexit, after Theresa May's previous two proposals were rejected by both her party and the EU. She's reportedly now working on a third model. The Aussie also down this morning, mainly on the back of that risk-off sentiment. RBA meeting decision is coming up, so that is being eyed by Aussie traders. The Canadian dollar, though, did manage to rise to two-week highs on Friday. It's off those highs this morning due to lower oil prices, but on Friday we did get better than expected monthly GDP figures, as well as stronger producer prices, which lifted expectations that the Bank of Canada could raise interest rates next week. Oil prices, though, after those strong gains, WTI surged by 8% last week, are down at the start of trading on Monday, mainly on signs that both Saudi Arabia and Russia have been raising output since May, though President Trump is still not happy with that. He's angry why OPEC didn't raise output by as much as 2 million barrels per day following that OPEC meeting we had over a week ago. If you look at today's main movers, USD CAD is the best performer. The dollar index up there as well, near the top of the table. At the bottom, though, we've got oil as well as the Aussie, Euro and Pound pairs against the dollar, all underperforming. So dollar yen, we can see it earlier spiked above the 111 level, breaking above that key resistance around 110.85. On Friday, we had the US core PCE inflation rising to 2% in May. That is exactly the Fed's target of 2%, and that reinforces the view that the Fed will continue to raise interest rates during the rest of the year. We do have the non-farm payrolls report coming up on Friday. That's going to be closely watched. But we also have, of course, trade tensions running high with the deadline of July the 6th nearing for when the US will impose 34 billion of tariffs on Chinese products. Unless, of course, the two sides do manage to reach an agreement before then, the US will go ahead with those tariffs. There's also been talk that President Trump wants to pull the US out of the World Trade Organization, so overall it's not looking too good for global trade relations. Quick look now at the euro, because although the euro did manage to rise close to the $1.17 level following the EU summit on Thursday, Friday last week, when a deal on migration was reached, this wasn't good enough for Merkel's junior coalition partners. The leader of the CSU is threatening to resign as party chief and as interior minister. He will be meeting with Merkel later today if the two sides don't manage to reach an agreement, and he goes ahead and resigns. That would put under threat Merkel's three-way coalition. If we now look at the Australian dollar, it's not looking too positive for the Aussie ahead of the Reserve Bank of Australia's policy decision at 4:30 GMT tomorrow. Given the rising trade tensions, the RBA could possibly sound a bit more dovish. That would pressure the Aussie even more, which had fallen to 17-month lows last week. So apart from the overall risk-off based on those rising trade tensions, we also had uninspiring manufacturing PMIs out of China, which showed falling export orders for Chinese products in June. All of that is weighing on market sentiment. Quick look now at today's economic calendar. We had the Tankan Bank of Japan's Tankan survey. Rather mixed, didn't have much impact on the yen. We just had the Eurozone PMIs. We're going to have the UK PMIs out shortly. Later on, the main focus will be on the US ISM manufacturing PMI. That's it from me. Thank you very much for watching and have a great day.